Busted.
The reviews are in.
Awesome.
You wanted more Joe Concha. And we heard you. More Joe. More show.
We're talking to you. Under promise and over deliver.
Joe Concha. Weeknights at 9. Plus Sunday mornings at 11 on 77 WABC.
Jimmy Kimmel no longer tries to be funny. Not that he ever really was.
Joe Concha. Weeknights at 9. Plus Sunday mornings at 11.
Democrats defending cocaine coming into the country.
The Larry Kudlow Show on the Red Apple Podcast Network.
So welcome back, everybody. I'm Larry Kudlow. This is the Larry Kudlow Show. That ended abruptly. Anyway, we are here. We're going to do some stock market work. Market's sort of ambling around. Got to see if there's direction. We're going to set some new records. And, of course, we have this great snowstorm and freezing weather. I don't know that has any impact whatsoever. But we have the guest, right? Yeah, we got the guest. Jim Iuorio is here, TJM Institutional Services, Chicago's leading restaurateur. Jeff Kilberg, CEO of KKM Financial. Gentlemen, welcome. It's funny. I was walking through my various stock sheets that Conrad DeQuatros always puts together for me. And I'll start with Jim Iuorio. It is true that I guess this is in dollar terms, Jim, but a lot of these foreign markets have outperformed. I mean, we've had a terrific market. Last year it's up 13. The S&P is up 13%. Since early April, it's actually up almost 40%. But you've got Japan, which is a shaky country, up 35%. This is the 52-week change. Hello?
Look, my dog's going crazy. I'm going downstairs.
Oh, okay. I was surprised at that. Shanghai, China, up 36%. Hang Seng, Hong Kong, that's up 36%. The iShares, MCCI, emerging markets, up 38%. Now, I guess some of this is because the dollar is down about 10%. But I was surprised. Let's see. There's even more. Latin America doing very well, up 50%, 53%. What do you make of that? Why is that? What's so great about those countries? Their economies aren't very good. Their currencies got very cheap. Maybe it's a currency play. But what do you make of that? And is it going to continue?
No, I think it's a combination of a couple things. And one, you just hit on it with the currency being cheap. But two, you have to remember that for several years, it was just buy America and sell everything else. And that showed up in, the euro versus the dollar until about April. And I know exactly that it was about April when the euro started to rally because I had my first trip to Europe planned in about 5 years. And it cost me 13% extra. But I think it's a huge unwind of that trade. But as far as if people look me in the eyes and say, where would you want to invest right now? By the way, I'm about to sound like Larry Kudlow and be way less pessimistic than I usually am. Here it goes. Drum roll. It's the U.S. The tax breaks and the deregulations are coming out. I'm not going to spend $1 going somewhere else. But I do think there's one major potential black swan that's lurking, and that's Japan. But besides that, I think everything in America looks fantastic. Deregulation, the investment coming home, all that looks good.
Japan hasn't grown in 30 years.
Yeah, I know.
Hadn't grown in 30 years.
You saw the bond yield shoot up a ton on Tuesday. If that yen carry trade goes to unwind and they start to have any sort of collapse, they're going to be selling a lot of bonds and a lot of tech stocks. I'm not saying it's going to happen. I'm just saying that was a little scary on Tuesday. Do you give me that?
Yeah, I'll give it to you. Listen, you're right about the euro and your vacation. 13.6%. That's a good call. You hit 13%. But the yen is 155.70. I mean, that thing was 100 not long ago. That's 155. It's a complete collapse of the currency. And they don't grow.
And it's a collapse against the dollar, which is also kind of collapsing because of profligate spending from the last administration and a little bit of this administration, too.
I don't know. I think
now I lost you again, didn't I?
I mean, if you're growing at 5% or whatever, I mean, we're going to have, this is a boom. with lower energy prices.
Go away.
Profits are very strong. I mean, Kilberg straightened him out. Now he's relapsed. He started good, Jeff, but he just went into
he needs his teddy bear.
Deep relapse.
I think he needs his teddy bear. I heard he said he was scared. 10 years. Jimmy, the 10-year hasn't moved. It moved 7 or 8 basis points. Get a hold of yourself. If I was there in front of you, I'd slap it 6 times this Sunday. But the point of the matter is that Larry's right. We are seeing earnings season. We are seeing profits, the mother's milk of the stock market. And look at the VIX. The VIX is going back under 16. So I know we had a little Greenland hiccup. I know we have another little tariff tantrum. But at the end of the day, what is driving this market? It's the U.S. consumer and profits by corporations. It is optimistic from my perspective.
I mean, what did I say that was different than that, Kilberg? I said the same thing, didn't I?
It was the dogs.
I got a lot of coffee in me. I just wanted to take a swing.
No, I
love you, Jimmy, but I had to take a swing.
It was the dogs barking. We couldn't hear. We couldn't hear the whole. The dogs wanted to weigh in on their long position. So the other thing is, I wanted to ask you guys. There were headlines. I think it was on CNBC. I mean, the best CNBC headline after one day the market went down. There's capital flight from the United States. Yeah. And then the market came back strong the next couple of days. But they're talking about now a prime credit crunch or some kind of credit crunch. Bad. We're going to have a credit collapse. So I'm looking here. The Merrill Lynch high yield spread has done nothing. In fact, it's fallen. It's come in 62 basis points. And then I'm looking at the Moody's BAA spread, and okay, so that's gone up 24 basis points. So maybe that got a little too far. But there's nothing going on here. These things are relatively stable. Jeff is right. The 10 years at 4.25. It's been bouncing around in a range. Really, the low end of the range. The high end is close to 5. The low end is 4-ish. I mean, you can try to make a dire, bearish case. All right, there are times when that is true objectively, but this is not one of those times.
Who do you want me for this one?
Sure. This one has your name on it.
Okay. So the credit spreads being as tight as they are, I think, is somewhat a function of excess liquidity, not just U.S. liquidity, but global market liquidity. The Fed is actually increasing their balance sheet again, injecting more money in the economy. But I do think that there is a side of that is reflecting little risk. And I hate, I always hate to say there's little risk because I do think the Japan thing's a big risk. But these media, we call them the TMZ of financial media, come out and they want everything to seem like it's bad for clickbait and everything has to be Donald Trump's fault. Like even on Tuesday when everyone was tagging the whole, somewhat collapse of the stock market and Greenland and tariffs, that was not the case. It coincided with Japan yields rising. That's why we were down. It was nothing to do with Donald Trump and nothing to do with rhetoric towards Europe, which everybody knows is negotiating, except for the TMZs of financial networks.
That's a good point. Larry Lindsay, you fellows know Larry Lindsay, very distinguished economist, former Fed governor, NEC director. He had the same point of view in his newsletter, which is a wonderful thing to read. You have to pay a fortune for it. He comps me, which is great. But he said the Japanese thing, the sell-off in bonds, the snap election, nobody knows how that's going to turn out. What's her name? Takaichi, really not that strong politically, even though she's a friend of the U.S. That was a bigger issue with respect to the financial markets than the Greenland debate in Davos. I mean, that was a bigger issue, and I think you're right. Now that's calmed down. So what happens, Jeff Kilberg? We've muddled around a little bit the last couple of weeks, and we've had a tremendous run. And the Dow is still close to 50,000. The S&P is close to 7,000. Kind of what happens next?
I think we want to test the bear's nerve, and I think 7,100 is a short-term target. But what is interesting, Larry, and to agree with Jimmy, it is interesting to see that stocks are being bought on every possible dip. And what's different about 2026 than 2025 is that you are seeing a broadening out of a market. And I know the Russell 2000 is up 7%, while the S&P is only up 1%. But let's not get too excited about the Russell. A lot of those companies don't make money. And if you look on a 5-year perspective, the S&P is up 80% and the Russell is up 23%. But the fact of the matter is that you're seeing a broadening, and 65% of the S&P 500 stocks are up this year. So I love that Lockheed Martin's up 22%, Freeport McMoran, Intel, I know, is down 17% yesterday, but still up 22% on the year and 108% on a one-year perspective. So Boeing, Nutrien, Costco, I get geeked out and crazy excited about these blue chip boring names. And that's why I think there's more of a sustainable bull market in these bears, that they think it's going to hit 7,100 and go back down to 6,000. I think they're going to get caught. They're going to be chasing it, and that's going to extend the market, exaggerate the market to the upside. But that is where it all coincides with maybe an announcement this week on a new Fed chairperson. There's a lot of good things lining up from a tailwind perspective, not a headwind perspective.
You know, you mentioned Lockheed Martin, which brings me to Mr. Trump's dictum about the defense companies, which are great. We have the best. But he doesn't want them doing stock buyback. He doesn't want them taking government money and doing stock buybacks. Now, I was reading some commentary on this from some Trump haters and some non-Trump haters. You have to kind of filter through who's writing, but I get that. But the point is, all right, Trump is meddling, but in some ways it doesn't bother me because, first of all, I've been a great believer that stock buybacks are a waste of money. Okay, that's just a waste of money. You want to return money to shareholders through dividends, that's fine. The best way to do it is to just build up your profits and the price will go up. But it doesn't bother me. And the idea that you're going to have a big military buildup, right? He's adding $500 billion to the military budget. It's a lot of money, fellas. He's now at $1.5 trillion budget, 5% of GDP, which I think we need. I don't want to let them, we're going to give them money, let them build all the new jet fighters. Fabulous. Okay. But they shouldn't take money and use stock buybacks. I think, I know he's meddling, but I think he's right to meddle.
Yeah, but because it's meddling in defense companies. It's kind of just make believe that they're independent private companies anyway. Their biggest.
That's a good point. Yeah.
The U.S. government. So I hate corporatism and I hate socialism, but come on, it's defense. It's literally it's a government program. It's a government. So I agree with him.
No, you're
Jimmy,
right. That's a
Jimmy,
good point.
I would say he's trying to recalibrate, Larry. He's trying to recalibrate across all industry and sectors. We own 10% of Intel. You may not like that, or you may like that, but at the end of the day, he's recalibrating across the sector from Lockheed Martin. It's a negotiation. It's the art of the deal.
Well,
he is finding a way for us to save more. Intel was that was our best holding last year in the Essential 40 ETF.
I know, because the government
loved Intel.
But Intel's not a good company. It's not a good company.
Not a good company.
It hasn't been a good company for 25, 30 years. It was once a great company.
Though. It's still essential, and that's why you're seeing the U.S. government own 10% of it. So the reshoring, the remanufacturing.
Is a national defense thing to be involved in the chips? Is that what you're saying? Because that's not a bad argument.
I think any essential company that we're talking about, and it's the Boeings, it's the Lockheed Martins, it's all these different companies that are essential. You're going to see more and more folks want to own U.S. names. So it's absolutely. I know AMD, I know NVIDIA have beaten the brakes off of Intel, but Intel is a U.S. soiled chip maker, and that's why you're going to see it keep on going. I know it'll pull back, but it's going to be trading $60 or $70 by the end of 2026.
I don't know. I think Intel maybe should try farming or some other industry. They're not. The chip business has not been kind to them. I do think that Trump is right. He wants these defense companies to build them faster. That's what he's saying. Stop the cost overruns. Right. Be more accountable. And I don't have a problem with that. It's like the 10% credit card. Okay, I don't agree with him. On the other hand, Citibank is already putting out a 10% credit card. But then when Trump was interviewed by Maria Bartiromo, he said the 10% ceiling would just be for a year, basically a year, to help people out instead of 30%, 10%. And so I was thinking to myself, well, okay, you're meddling, sir, but if I were in there, I don't really think I'd object that much. Okay, fine. And it's not pure capitalism, but what the hell? People paying 30%, man, middle class. Let's give them the refunds and the tax cuts. And then, they'll be in even better shape. Wages will be even stronger. Energy inflation's going down, and they'll be able to better afford credit cards. So some of his stuff, it's funny. At first blush, you think, oh, I don't like that. But then you kind of think it through, and, it's pretty good. It's just like, he sort of kicks you in the butt sometimes. And I rather like that. anyway, we're going to have 100% tariff on Canada. Maybe we'll talk about that in the next segment. We got Jim Iuorio, TJM Institutional Services, Jeff Kilberg, KKM Financial. I'm Kudlow. I'll be right back. So, somebody's got to tell me, I'll start with Jim Iuorio. I got $5,000 gold in round numbers, and I got $100 silver, okay, in round numbers. And it doesn't look like it's over yet. What is going on there? Okay, what is going on there?
It started in gold with the central bank buying, which accelerated, back in 2022 when we froze Russia out of the SWIFT payment system and central banks started buying it. So back in April, the gold-silver ratio went up to 104, meaning 104 ounces of silver by 1 ounce of gold. I know you guys know that. I'm just, for people listening. So then all of a sudden, silver has this catch-up, and then comes in the story of AI and electrification and silver deficit. So it gets like this exponential tailwind for both of them. So silver's been amazing. And you know that I've been all over that trade and the gold trade. And by the way, I have sold out of 25% of my gold and silver holdings, not because I'm no longer bullish, just because I think it's prudent to do so after this kind of run. I don't think they're going to keep moving in the same direction they are. If they do, with the same velocity. If they do, I think it signifies more of a problem than anything good. But I do think it's been a great trade so far, and I think the fundamentals are still there. Again, I know you hate when I say this, but we still have too high of deficits, and we're still injecting too much M2 into the system.
No, we're not. M2 is growing at 4% year on year. I actually follow it, and this is not true. It was 30% 5 years ago. That's when you should worry about M2. But look, silver does have rare earth properties in the AI revolution world. I agree with that. And it's an industrial metal. I mean, it's like you make things and use silver. So that's the strength in the economy. But Jeff Kilberg, the gold thing just makes no sense to me. I mean, deficits are coming down. I mean, they're too high. I know they're too high, but they're coming down. You just can't wait a second, the deficit. $5,000 gold makes no sense whatsoever. Unless you think that, I know the central banks are buying. I mean, China and the BRICS want to hurt the dollar. I get that. But just it's this exponential thing that's going on that I don't understand.
I think it goes back, though, and you're not wrong. But the momentum is there. It's remarkable to see. But specific to gold, it's been a safe haven for thousands of years, almost as old as Jimmy.
Yeah.
And sure enough, that safe haven trade, it's tangible. People want to own it. So it's not just institutions, central banks, it's also a retail drive. Right. So it's going to go higher, Larry.
It's going to go. Now you're going biblical on me, and that's a short position right there, the biblical X. Jim Iuorio, Jeff Kilberg. Thank you, gentlemen. Folks, a quick break and some money in politics with Liz Peek and Steve Moore. I'm Kudlow. Please stick around.
Thanks for listening to The Larry Kudlow Show. You can hear The Larry Kudlow Show Saturday mornings at 10. If you like the podcast, share it with your friends and listen anytime at WABCRadio.com and download the WABC Radio app. Hit that subscribe button on all major podcast platforms. Plus, follow WABC on social on Instagram, TikTok, Facebook, and X. See you next time for a new episode so you never have to wonder,
what the heck is going on here?
America's debt is now over $38 trillion. So, protect your savings with something real. Gold. Sanctuary Metals helps you move a portion of your retirement into physical gold. Tax-deferred and penalty-free. Please call 800-801-6487 or just visit sanctuarymetals.com to get your free retirement defense guide. That's sanctuarymetals.com.